Scarface is making $300 per day using this strategy, so I had to test it. I finished with a 62% win rate and 7k in return. However, using data science and my knowledge in AI, I optimized the strategy to make it a 100% win rate and a return of 12k, at least based on my data sample. I'm a money engineer, and with my master's in machine learning, I've helped traders get funded and get payouts using data science. So in this video, I'll quickly go over Scarface strategy. We'll cover what a perfect trade looks like so you can recognize it when you see it, and I'll show you how I increase its win rate using AI concepts. And a quick reminder also that there's only 3 days left to join the Trading Journal Lab, and you get 30% off. It is a lifetime membership and will never have a price lower than this. We're building new tools and new modules for the community, so price will be increasing for the next year. So right now is the best time to join. Alright, enough marketing, let's now cover the strategy. So in his video, he was using SPY, which is the S&P 500 for the strategy, but I'm here on Nasdaq since this is my main instrument for trading. So what you need to do is be ready right before the equity open at 9:30 a.m. Eastern time. So if you just put your charts to New York time, everything will be set automatically. So I'm here right before the open, so you can see that this is the 9:25 candle, and we'll just wait for the next candle. And usually at the 9:30, if you have experience with Nasdaq or any other similar instruments, there's a lot of volatility coming in right at the open of the equity market. And this is what we will be using. So what I'm going to do here is just write the high and the low of this candle right there. So once we have that, this englobes the first 5 minutes of price action. And if you don't have too much experience, you can see that we have the open at 9:30 and we got the close at 9:35. So let's just go on the lower time frames. All right. So I have my high and my low. So what we'll now be waiting for is a clear break of either the high or the low, and then a retest of this level. But there are still some things that we need to be careful of, and I'll give you all the details as price action is developing. So let's just see what we get. So clearly here, you can see that we had a clear break of the low. We had a lot of fair value gaps left behind, which shows a lot of volatility and a lot of momentum in our direction. And this is what we want to see. We don't want to see a small sweep of the low and then some ranging around the level. We want to see something very significant and then a comeback to the level. And then there's still one step left for this trade. So let's just see if we get the comeback to the level. All right. Right there, this is what we want to see. You see that we touched the level, and this is actually pretty impressive. As I was doing my back test, I think there's something in price action that reacts to the first 5 minutes of the equity open, because you can see the clear respect of the level. We got the second candle that's also rejecting, but in his video, he was waiting for this type of rejection. But me personally, if I want to go short, I would like to see a bearish candle rejecting the level, which will actually show me that not only did we stop at the level, but we're starting moving in the opposite direction. And this is what I want to see. I don't know if Scarface would enter right away, but me personally, I would like to see a bearish candle because I'm looking for a short. And this is what we get. You can see that none of those candles closed above the level. If we would see a close above, we would need to cancel out this trade setup. So I can just wait for the candle to close and then put my stop loss right there. So for the stop loss, I would use something like maybe you can cover the fair value gap right there, or you can even use a candle that broke the level. So in this case, this is what I'm going to use. So a clean 35 points for the stop loss. So personally, I'm going for a 1 to 2, but if we go back on the 5 minute, we can see that we have different levels that we can target for a trade. So we have the low of the equity open. So this is the lowest point we reached since we had the equity open. And we also have the London low at that point. So that would be maybe another potential target area that we can reach. But to be very conservative, I'll just go with a 1 to 2. And in his video, he said that most of your trades should be on average a 1 to 2 at least. And right to take profit. And we even went and reached the London low. So we broke those two levels. So you can see we had a beautiful reaction to the level. I was very impressed. And I saw that in a lot of the trades I backtested. And this is why I cherry picked this trade as the perfect trade example for this strategy, so you can have a visual way of recognize it. However, all the trades I backtested for this video were taken from the last 3 weeks. So I never cherry pick my trades for my backtest. I never go 5 years ago or 3 years ago. I always go in recent price action. So I backtested the entire month of November because we're currently in November at the time of recording. And in total, I was able to find 8 trades, and you can see them here. So to optimize your strategy, you will of course need a kind of trading journal. You can of course use some Excel sheet or some other Notion template, but most of them, to be honest, are very time consuming. They're not made to journal your trades. You would need something that is very specific, and in here I'm using the Notion template that's given to all of the members. And the difference between this Notion template and all the other Notion template is that I'm able to break down the strategy into very specific steps, which I'm calling features, which is a concept taken from machine learning. And if you want more details about features, you can definitely look at all my other videos. Some examples of features we're studying are those: the liquidity sweep, the type of entry. I covered many times the fair value gap at different time frames, the breakout structure at different time frames, and there are many others we're studying that's making a huge difference in objectively finding if our current setup is high probability or low probability. And if you want more details, of course, you can join us in our community. So let's look at the data now. I had 8 trades with a win rate of 62.5%. Let's just look at some of the winning trades, for instance. So in here I have the section winning trade, and I have all of my screenshots right there. You can see once again, we had a perfect comeback to the level, which is very impressive, to be honest, on price action. Clean comeback. I waited for the bullish candle to close, and then I entered right away, and price went even further. Let's look at another example. I have this one right there. Once again, very impressive. I had my low and my high. We broke down the low and we came back later in price action. We went for a 1 to 2, and this is why most of the time when I'm doing my back testing, I'm always going with something very conservative as a 1 to 2. We came back to stop loss. In here, considering also the spread and everything, you would probably being stopped out right there. And then price continued lower. Let's look at the third one. Oh, well, this is actually the trade we covered as a trade example. Beautiful trade. This is why I took it as a perfect trade example. And then we had another one right there. You can see a lot of momentum breaking down the low. We had a clear bearish candle that closed very far from the low. Clean comeback. I waited for the bearish candle right there. Rejection. It came back to break even at that point. So if you're the type of person that's always going break even very quickly, you would have missed out on this trade, because we eventually came back once again to break even and then went into almost 4R in profit. And by the way, if you want to find out the best way to go break even or take profit, I coded a tool that's able to tell you exactly the best way to go break even and take profit. So definitely download that for yourself. Now let's see what we get. Of course, it would have been better if I had 100 trades in my sample, but I don't have time to backtest 100 trades every time I'm doing a video. I'm just doing a proof of concept for you. And if you like this strategy, I'm just guiding you on how you would optimize it for yourself. And then you should do the backtest and then gather much more data. So you can see here in the calendar that most of the weeks, if you would do the total, are profitable. So first week of November, I would have finished with a 2R, second week plus 1R, third week plus 2R, and the current week we're on Tuesday, so I was not able to backtest the rest of the week, but I still got a 2R with this strategy, so very impressive there. But there's a way of removing many of the losses, and that's your goal when you're looking at data. You want to remove as many losses as possible and keep as many winners as possible. And in my past videos, we covered many different features to accomplish this goal. And today I wanted to present you a new one, which is the execution time. As you know, especially if you've been an SMC or ICT traders, time is very crucial when we're trading. And what I found out in my journal while backtesting the strategy is something very interesting. So let me open up the execution time on full screen. So just look at this data. My best trades, the trades that went most in profit, all happened between 9:45 and 10 a.m., which is right after all of the volatility from 9:30 to 9:45. This is where people are getting stopped out. This is where people are over trading. The first 15 minutes of the equity open are very dangerous. People are getting slaughtered at that time. But if you would just wait for the 15 minutes to pass, and some other people, depending on their strategy, are actually waiting for the first 30 minutes to pass, because sometimes also we do have some high impact news at 10 a.m. You really need to adapt your strategy to those times. So you can see that I had one trade at 9:30 that went for a loss. I had some trades also very late into the trading session right before lunchtime, around 11:30, and those also went for a loss. So I had a winning trade which happened between 10:45 and 11 a.m. But look, what's interesting with this trade is that it didn't go very far in profit. You can see that all of the trades that I took between 9:45 and 10 a.m. all went very deep in profit. And the reason for that is that we're in the heart of the volatility. If you're able to enter a trade and you got the right direction for the day, your trade will probably go even deeper in profit, and this is what happened. But when I took a trade much later in the trading session, I was only able to get a 1 to 2 and then price reversed against me. Alright, so what does that mean for this strategy? Well, if you're able to only take your trade between 9:45 and 10 a.m., and even as you're getting more data, my guess is that even adding the window from 10 to 10:15, or even the window of 10:15 to 10:30, where we're still very much in the heart of the trading session, I'm guessing you will have much more success, both on the win rate and also how far your trade is going. Because look here, I was able to get a 100% win rate. And if instead of going always for the 1 to 2, I would take my 1 to 3 instead, I could get a 12R return. And when we compare that with the 62% win rate and the 7R, this is a huge difference. This is 5R more, only taking 4 trades instead of 7R taking 8 trades. This is the power of data science. I'm gathering data in my journal. I also have the skill of knowing what to look for in price action. It could be the bias we saw in one of my previous videos, a mechanical daily bias that I applied. You can look at all of those different features to try to optimize the strategy. And this is how I was able to transform the strategy to a 100% win rate with a 12R return. Of course, once again, this is only based on 8 trades. As you're gathering more data, I'm sure the win rate will decrease, but you will still be able to have a highly profitable strategy which is optimized. And if you're on top of that, you're applying the decision tree I covered in one of my previous videos, you'll be able to have much more confidence in the strategy that you're trading. So I hope I was able to give you some value today and show you the importance of journaling your trades and using data science and objective features to optimize your trading strategy. And if you're looking for my trade of the week, which was a beautiful trade using the inverse fair value gap, you can watch the video right there. See you soon.